Welcome to today's video. In today's video, I'll be giving you a full trade recap of how I made $8,200 taking this buy right here on the S&P 500. Yes, $8,200. Why? Because I recently started scaling my capital. You may have noticed that the figures are getting bigger and bigger, and that is because this trade was copy traded across 8 different funded accounts. That is why when you start seeing money from trading, start reinvesting, start scaling your capital, because that's what's going to allow you to grow and start pushing those bigger figures in your trading. And that's what this is all about. So yeah, this trade was a very nice, clean 1-to-2 risk to reward ratio trade. It was taken as a continuation trade, just simply following the bias. And I'm about to break it down, and you'll see this trade wasn't difficult at all. So first thing I usually look at is the daily, the 4-hour and the hourly, but I mean, there's not that much to show you guys. I mean, you look at it and it's just bullish. It's just straight up, uptrend, 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 uptrend. I mean, it's quite hard to determine a bias when we're just that bullish. So the best thing that you can do is just follow the trend, right? We've been ramping higher and higher and higher for the past who knows how long. So the best advice that I could possibly give you is follow the trend. And that's exactly what I did today. So what did we see at market open? Well, let's go and drop down to the 5-minute time frame. Looking at the 5-minute time frame, we can see that market opens here at 2:30 on the dot. Now, as market opens, bang, we rip higher. When we start ripping higher, I'm thinking, damn, because I'm quite frustrated because we have London lows right below, right? You can see on the left-hand side, we have London lows right here. My pre-market analysis was telling me, okay, let's wait for London lows to get swept. Once London lows get swept, we can look to catch that whole movement higher. But unfortunately, that did not happen. Market open and bang, we ripped all the way up. So instead of thinking, damn, my liquidity didn't get swept, no trade for today, what a shame, I'm just gonna give up, we kept going. So what did I wait for? Well, I noticed that price was constantly making this rampant move higher. So what I did was I used my equilibrium tool to mark out from the swing low up to the swing high. I waited for price to come into a discounted zone, and then I was thinking, okay, then I would take a trade. And this is what I was saying on live stream. I was actually on live stream at the time. A lot of people were asking me, well, what if we reject off this fair value gap here and we don't come into a discount? And I said, I don't care. I'd let the trade go. I'd just let it go because I don't need the trade that bad. Anyways, what I noticed was price came down and we actually rejected not only from equilibrium of the range, so not only from this discounted zone, we rejected from a bullish 5-minute fair value gap. And yes, it is quite small, but it still is valid. You can see that we retested, we rejected, and bang, now I'm starting to think, yes, let's catch these buys. So next thing is to drop down to the 1-minute time frame, because this is going to be where I actually managed to get a perfect execution. So after we get that rejection from that 5-minute fair value gap, I'm thinking, well, now I need to see an inversion. I need a confirmation that we're going to push higher. Now we have this 1-minute bearish fair value gap here that we can see gets inversed nicely, but that wasn't enough for me to take it. Some of you may have been comfortable with just taking that inversion, but personally, I was not. So what did I wait for? I waited for an inversion, and I also waited for a break of structure to the upside. So I waited for price to close above this recent high. You can see that we closed with this candlestick here, and bang, that is exactly where the entry to the trade was. Do you see how it happened? Equilibrium, fair value gap, drop down to the lower time frames, inversion, break of structure, bang, the trade has been taken. Do you see how perfect that is? Now, with regards to stop loss settings, stop loss placement, there's not really any good areas. I typically like to set it above a 1-minute or a 3-minute or a 5-minute fair value gap, but we did not have any on this way. So I just decided to put it relatively near this, this swing low. I could have put it lower, but that would have damaged the risk to reward. And I just think we were overall so bullish. I don't need to be that conservative and that safe. I could take a bit more of a risk because we're simply that bullish. With regards to where I set my take profit, I was targeting a fixed risk to reward of a 1-to-2. And yeah, this is what I do. So when we're at all-time highs and we don't have any liquidity, we don't have any draws to target, I just look for a fixed risk to reward, right? You and I, okay, I'm trading on funded accounts. I know that if I'm risking $1,000, if I hit a 1-to-2 risk to reward, I've made 2K, right? On a funded account, theoretically. That's all I need. sometimes, because what if the account's already up 1K? All I need is a 1 to 2. So I aim for a fixed risk to reward system because I know that ultimately we're just going to keep going higher. And what can we see? We can see that we just kept ripping, right? So clearly the idea was right of just letting it rip, but I didn't want to hold on to it forever because, you know, I have things to do with my life. Anyways, I ended up cashing out this position. This trade ended up hitting perfectly. And yeah, I mean, it made $8,200 across my Tradecopia account. I mean, there's not much really to it. Oh, another thing that I would like to mention, just because, you know, I like to go deep into my analysis. Not only did we tap into a 5-minute fair value gap, we also swept out a zone of engineered liquidity. We can see that price came down here. And when what we did is we actually swept out this low. That low is a low that rejected from a bullish fair value gap. So this means this is a draw on liquidity, engineered liquidity, sorry, is what I meant to say. Super strong, right? So when I see price reverse from there, I almost 100% know that we are going to go higher. And that is what I kept saying to all of the people in my live stream. We are going to go higher. We are going to go higher. I simply then dropped down to the 1 minute time frame, waited for that entry, waited for all that confirmation that I needed. And yeah, we just simply ripped higher. There's not much really else to it. I think it was a pretty simple trade. Oh yeah, another reason for why I had so much conviction in this is because when market opened and we made this huge push up, we actually inversed all of these bearish 15 minutes fair value gap. What was that? We inversed these two bearish 15-minute fair value gaps, and yeah, I think it was pretty perfect. I think it was exactly what we needed. So that is everything for today's trade recap. I hope you enjoyed it. I hope you learned a lot from it. I did go through it quite fast, but ultimately the things that you need to remember are equilibrium is amazing. The trend is your friend, and just wait for that confirmation. And then when it comes to trading at all-time highs, you know it's going to keep going higher. So just let it do its thing. Just let it do its thing. But yeah, I hope you guys have a lovely rest of your day. Join my Discord server if you're not yet in it. It's going to be linked in my TikTok bio. And if you have any questions, please feel free to drop it in the comment section below. If you enjoy the video, drop it in the comment section below. Drop a like on the vid, show some love, and I will catch you in the next one.